All right. So we are live, everyone. Hope you're all doing well. Thanks for joining in. If you are here, let me know in the comments. We will start as soon as people join this and also talk about the different news that I'm seeing in the crypto market right now. I have four of these right now, so a lot of things happening, especially in the Binance, Bitcoin, and Apple space. These news are not talked about enough. I will go over these articles. I will put these links in the description of this chat later on, so you can also have a chat and also understand why these kind of news go missing in the whirlpool of crypto news that you see all the time. This is really important to see this kind of ingrained and underneath a lot of these news articles. This is the kind of news that you will want to know about, not be scared of the crypto market. So let's get right into it. So first one is from the timestabloid.com. This is the news about Binance releases latest proof of reserve report for Bitcoin, Ethereum, XRP, and 27 altcoin. So, for those of you who don't know what is proof of reserve, this is basically a way to tell you about the exchanges and the reserves of different cryptocurrencies. So, this is really important these days, especially after FTX. This was made to be a trend, and a lot of cryptocurrency companies like Binance and KuCoin and other exchanges, they started doing this proof of reserve, showing how much reserves they have for different coins. And basically this wanted to let people know like how much data and how much coins it is there. So basically what happens is sometimes exchanges like FTX, which were a total scam if you don't know about it, they didn't hold any reserve in their account. They only let you buy it and they used your money to do different things. So that was really bad for the space, and this is why it is important to have this proof of reserve. In the current financial system as well, you don't know about that, which is known as fractional reserve banking. So if you have spent some or just added some money in your bank account, that doesn't mean the account is there already. So this way, proof of reserves also help in doing the same for cryptocurrencies. It's not telling you that they have less reserves. They want to have either equal to what people are buying on their exchanges or even more than that. So proof of reserve is a great way to bring in that authority and clearance in that space. So Binance has done that in a move to assure its users to of the security and transparency of its platform. Binance, the world leading crypto exchange in terms of trading volume, has released its highly anticipated August 2023 reserve report. This report details the quantity of various digital assets held in Binance Treasury, along with the reserve ratios concerning customers' net balances. So, if you don't know about the banking system currently, as I was saying earlier, this is currently using fractional reserve banking. So, if you're putting $100 in your bank account, for example, they don't hold all of it. They basically would hold a fraction of it, which is why it's called fractional reserve banking. And they will use the other half or whatever percentage. Usually it's more than half. So don't think your money is sitting in the bank there just doing nothing. They are either earning interest on your investment or savings, and you are not getting anything out of it. So that's the reason our current financial system is not up to the mark in terms of giving you returns and benefits for your savings. So that's the reason proof of reserve is there. And as you see, for amounts of Bitcoin and altcoin disclosed, Binance has a reserve rate of 105.61. So basically that means that they are having more Bitcoin on their balance sheet in their in the terms of customers holding it. So they have net balances of 621 million, and around 588 million is currently being bought by people, and they hold their reserves on that exchange. So basically, this is a good number. It should be more than 100% at least, and this is good way to understand if they have the Binance or any other coin, Ethereum as well, and they want to tell you that these reserves are there for people to use, and they are not going to be scammed like other exchanges like FTX did in the last year or so. So this is a good sign. Binance is doing what it takes for giving their transparency reports as well. So it is a good way to go ahead in this market. Basically, give more assurance to people, and let them know that their money is safe, which is really important if crypto space wants to grow from here and wants to bring adoption in the long term. So this is the Binance news. There is another article about it on Binance's main page. If I accept this, you can see they have the direct dashboard, which is telling you exact reserves and different coins. They also tell you what it is exactly. So this is a good way to know, and they have this technical term known as Merkle tree, which is a cryptographic tool that enables the consolidation of large amounts of data in a single hash. So this is what they are doing technically. If you want to know more about it, there would be more definitions of it on internet. So have a look if you are interested. Cryptography is a technology in the end. So they are using different kind of technology to consolidate that large amount of data from different places. So this is good, and I will move on to the next one. So next up is Bitcoin miners need BTC price over 98K by the halving. So to avoid being in the red, publicly listed Bitcoin mining companies will need the BTC price to be at least 98,000 by 2024 halving. So this is basically what amount and speculation is started in this space already, because you see 2024 halving is coming, and always around that time you see the price going higher, and the Bitcoin supply gets shortened. So obviously the prices get higher because there is a supply shock and supply crunch in there. So whatever, it's basically supply and demand in terms of economics. And when Bitcoin halving happens, the amount of Bitcoin being mined every day or every month is becoming lesser and lesser. So that's the reason that it will go higher. And obviously there are speculators who want to make the guesses for those prices, but obviously no one knows it. If someone tells you what price is Bitcoin going to, don't believe them, because no one knows exactly. It's a big market now. It's around 500 billion, more than 500 billion in trading volume last time I checked. And this is obviously not a small market anymore. So this article basically tells you that the company which are doing Bitcoin mining are needing it to be at 98,000 if they want to be in the green side of profit. So predictions that Bitcoin 29,519 will see a six-figure price by the end of 2024 continue to surface despite the BTC price losing the $30,000 level recently. So for publicly listed Bitcoin miners, in particular, a price north of 100,000 may be more of a necessity than a forecast in their business models are to remain profitable. So now they have already been in that business, and if they have to be profitable and want to continue their business as a Bitcoin miner, then this will have to happen for them. Otherwise they will go out of business. So this is basically how it works. Bitcoin halving, bad news for public miner. Bitcoin mining stocks have been on a tear this year, outperforming BTC by a wide margin in recent months. While BTC has seen reduced volatility and a period of consolidation, Bitcoin mining companies stocks have risen by nearly 100% in a matter of months. So this is another thing that happens, and it has happened previously in terms of gold as well, where gold was mined from different gold mines, and the prices were basically based on the supply of gold, but the basic economic factor behind it was the companies, and the companies that are mining gold were also profitable businesses, because obviously they are getting gold. And if you invest in those kind of companies who are giving you the tools to mine gold, and in today's term it is Bitcoin, because Bitcoin is digital gold, and this is what happens. It outperformed the original asset named gold at that time, and now it is doing for Bitcoin. So stocks of Bitcoin mining companies have risen by nearly 100% in a matter of months. So that tells you a lot about the stock market and also the Bitcoin mining companies, how they work as well, because a lot of people invest directly in them, so they have exposure to Bitcoin, but also they also are not directly exposed to Bitcoin's volatility. So that's the reason these companies are getting higher. In last few months, Bitcoin was $15,000 and it came back to 30,000. So obviously the miners had more than profit in this term. So if you see, a recent report by Seeking Alpha explores BTC mining by examining one popular miner in particular, Riot Platforms. So Riot Platforms is the purple one, which is 54.7%. And if you see, it notes that despite Riot being expected to triple its mining capacity in 2024, the company and Bitcoin miners in general could face serious headwinds from the halving. A 50% decrease in the BTC block rewards cut miners' main source of revenue in half. Miners like Riot can also issue new equity shares to fund their operations. And you can see this dilutes existing shares, meaning that even if the company's underlying fundamentals are sustained, the share price may not keep up. So obviously they have to uh, make changes to their equity and fund their operations by selling these kind of equity shares as well. So this will obviously bring their cost down, their stock price down, because they want to keep operational. They'll have to do these kind of efforts if Bitcoin doesn't reach 100K. So that's the reason they are saying that it needs to be more than 98K if they want to be profitable business in future. Combine this with the fact that many miners could already be overbought at current valuation, and things don't look too rosy for public Bitcoin mining stocks. Although public mining stocks have outperformed Bitcoin in 2023, an increase in BTC being sent to exchanges could indicate a decline in momentum. A big increase in Bitcoin's price will therefore be required for miners to remain profitable at today's hash rate levels. So this is a tweet by Joe Consorti, and he says that both Bitcoin and Nvidia rose by less than public miners this year, 80% and 222%. The best way to get leveraged high beta to exposure to BTC. So basically, this is a trend. Right now, they were having more, you know, returns than Bitcoin. Obviously, in the short form, this was a good bet for people who were trying to understand and trying to put their money somewhere. But this is obviously high risk. No one could have guessed it. People who have big teams, they spend this kind of money on it, and they go ahead and put this kind of stock market and different strategies in there. They do this kind of stuff. But if you're starting out in this space, just remember that having directly exposure to Bitcoin is the best thing you can do for your future self, because this is digital gold. Every day the supply is getting shortened. We get the news that there are a lot of companies and a lot of big names getting into Bitcoin space specifically, and that tells you that there will be a lot of demand in future. And each day you see the supply getting shortened. Then in future these miners would have hard time because they will be able to mine only few bitcoins than in the current terms, and they will be able to sell less. But in the end, if you have exposure to Bitcoin directly, you will outperform these numbers pretty easily, because then you will see why Bitcoin has risen to what it has risen to till now. It is one of the best performing asset since its inception in 2008, and coming to $30,000 from $0 where there was no market is a big deal. So you have to understand why Bitcoin is the big, crypto king here. Obviously, number one in the crypto market. Okay, so based on the reports, the report warns that holding BTC mining stocks is extremely risky as underlying fundamentals may not keep pace with current valuation that may not be pricing next year's Bitcoin halving yet. So, as I said, yeah, it's not a good idea for long term. It would be a good idea for short term. By now, if they would have sold it already, that's a good way. They won a lot of, you know, money in there, 457%. So base BTC price to 125 in 2024. Meanwhile, a recent report from Matrix Port entitled Matrix on Target prepare for a soaring 2024 year-end Bitcoin target of 125,000 describes how BTC could reach 45,000 by the year-end and 125,000 by the end of 2024. So as we move towards 2024 halving, which is around June, um, or should be around that time next year, you will see these number being thrown out by everyone, even Bloomberg. These guys, they come in to tell you that okay, now you start buying it, but they won't tell you to buy it now, because obviously, right now these big guys are accumulating as much as they can, and they are trying to keep you out of the market. So make sure that you understand what is happening in this market, and there is a lot of manipulation happening for people who are everyday investors who are starting out. If you have been into this market for last couple of years, you would know that there is news coming out every day. But if you see behind this kind of news, which is this stuff where I'm talking about what is happening to Bitcoin and who is owning it, who is buying more of it, this is the kind of news that will not be in mainstream media where you take your news from, but it will be here in these kind of articles where not a lot of people will go and do their research. So this is the reason I do it on Crypto Clarity, try to make it clear for you guys that this is the time to get into it, because when you see the prices soaring next year, you will feel the FOMO and you will come in thinking that you should have bought it earlier. So that's always the case, and I think that's it for this news. I will see the next one, which is about Apple's App Store. So cryptonews.com has this article which says Apple's App Store guidelines under scrutiny by lawmakers for blockchain and NFT limitations. So, Apple, who is always known for not allowing other companies being the, you know, mega store, or obviously you can say monopoly for mobile devices, they are facing regulatory scrutiny in US over its App Store guidelines, which allegedly hurts apps related to blockchain and NFT. In a formal letter, US Representative Gus Bilirakis of the Republican Party representing Florida and Jan Schakowsky, I don't know how to say it, of the Democratic Party representing Illinois expressed their concerns directly to Apple's CEO Tim Cook. Lawmaker raised questions about the potential impact of Apple's guideline on the advancement of innovative technologies like distributed ledger technology and NFTs. So this is the U.S. representative of Republican Party, Gus Bilirakis, Today, I sent bipartisan letter to Apple regarding iOS store policies and their impact on emerging technologies like blockchain and NFTs. Congress must understand if Apple's policies are limiting innovation and American technology leadership. So full letter is there. So if you're not on Twitter, make sure you follow me on Twitter, because this is the space where you see a lot of these kind of news, and look at how people are putting these documents on there, which is literally how a democracy should be run. And people like Gus Rakesh and a lot of other people who are running for their elections, they have started doing this, and this is a good way to run a democracy where people know what is happening. Earlier, these documents would be hidden somewhere, and no one would know. But now, with internet, it's easily accessible, and people are putting it out there. So it's really important to know what we have in today's day and age because of internet, and why it is so important to have these kind of tools and social media platforms to understand about what is happening. So this is really important. I will put the link in the description. Follow me from there. And if we go ahead, they noticed a pattern in Apple's approach where the company appeared to profit from and limit the functionality of crypto apps simultaneously. This is achieved by mandating the release of light versions of the apps, which not only generated profit for Apple but also reduced the overall utility of the application. The lawmaker cited the case of Axie Infinity's App Store experience as evidence of this strategy. Axie Infinity is a crypto game as well, so if you don't know about it, they noted that while Apple has justified these limitations as necessary for security, there is a growing concern that companies using the App Store as a tool to suppress competition. The lawmakers said that they believe it is crucial for Congress to thoroughly understand the App Store guidelines and assess how they may hinder innovations. Crypto apps face struggle to comply with Apple's 30% fee. So this is something you won't hear about, in normal news, because Apple, which is a giant, obviously, that's how they became a giant, by cutting down on competition, buying these competitive companies. They already, have done that a lot of times, and that's how they are a big trillion-dollar company. Right now, they have put these limitations as well. They have asked developers to pay this fees from their app store. If they're putting an app, they will take a cut out of it, and that's a 30% fee. So that's not fair for people who are putting their hard work, and the Apple comes in and takes up that 30% commission. So this is really bad for innovation, and obviously that's the reason they have come up with this kind of you know um, letter to the Congress. So one specific anti-crypto policy mentioned in the letter is the requirement for blockchain projects to give up to 30% of their gas fees to the App Store. Coinbase Wallet, for example, had previously claimed that complying with this requirement was impossible because Apple's in-app purchase system did not support cryptocurrency. So you can see the contradiction in Apple's policies here. They are not allowing them to use cryptocurrencies, and again, they are taking 30% off their gas fee. So either way, Apple will win, and they want it to have it as they want it. So this is really bad for innovation, and that's why you can see a lot of companies are looking for alternatives as well. Even companies are going outside of US just for this kind of thing, that they are stopping innovation. So this needs to be really clear for people living in US, that it's the world is bigger than that. It's just not USA, and it will move forward because technology is there now. So likewise, Demus, a decentralized social networking app backed by Jack Dorsey, has been facing removal from the App Store because it allegedly fails to adhere to Apple payments rules. The app has tipping feature that allows content creator to receive tips in the form of Bitcoin through the Lightning Network. Apple deems this feature a violation of its guideline, as it prohibits developers from selling additional in-app content unless the transaction goes through Apple, through which the tech giant takes a 30% cut. Meanwhile, there has been a surge in interest in decentralized social media platforms amid recent controversy around social media platforms and their adherence to values of freedom of speech. So this come down to social media as well now. So because big monopolies like Facebook as well does this in different ways, and they have this same method of cutting fees, taking out a lot of commission, and stopping people from innovating on this platform because they are so big now. They can literally do anything they want, and we need different kind of methods and tools. That's the reason Web3 is a whole uh, term of technology, is not just cryptocurrency. It is more than just cryptocurrency because it involves all of these technologies like AI, social media, all of these which will come together, and make it a better solution rather than just everyone taking advantage of the common man. So that's really important. I think if you have any questions, let me know. Put in the comment section below. I'll see you next time. Thanks for watching.